Good morning, everyone. Welcome back to the Euro trade on a Thursday, one day before NFP. Now, if you are here for the first time, welcome. My name is Marcus Stalker D. I've been trading for 18 years and 12 years out of that. I've been trading for various prop firms, including Topstep. I've been with Topstep for about 10 years. So here we are. All right, so I slept terribly last night. One of my older doggos, he totally freaked me out. He was dreaming, and yet I wasn't sure whether he was like having a seizure or something. But yeah, so I got really worried, and it turned out that he was just running in his sleep. So yeah, and as a result, I just couldn't fall asleep till 4 in the morning. So I'm not going to be doing any live trading today because I'm just completely knackered. But yeah, let's do some analysis though, because there are some interesting things happening in copper that I can see. So let's focus on copper. Big time frame. Let's go to the daily chart. Now we still have this crazy smash down that we didn't really recover from still. So does that mean we're just gonna use that as the next starting point for more downside? I don't know. Remains to be seen, right? But if we look at how the price is traded away from that, it's kind of creating a bit of a channel, but it's not really committed to any particular trend. Lots of overlapping candles, so all looking a little bit messy. So that's from the bird's eye view. We built a lot of volume here. Is it accumulation? Are we going to start going through that weak structure at some point? Remains to be seen. That's certainly one of the possibilities. But let's see what we have today. Now today Asia took this move. It's a 4-hour chart, and you can see that they committedly went lower. Now on a 30-minute chart that becomes quite pronounced. So here is, where's Globex? This is Globex open, and they remain quiet until the Hong Kong exchange starts kicking in, and then all of that volume brings this nice dip all the way down. So why is that important? Because we do have the ADR low line right at 46.05. 56. 46. Yeah. 56.05. So that is almost to the tick here. Now, what tends to happen? What tends to happen when this is done very early? A couple of choices. You can either have a stop run and reverse for either LME or for COMEX. That's certainly one. So you would expect a little bit of a pop below and then a reversal. Or you can have a single direction day if we ignore this line. We're not ignoring it yet, right? We're hanging above it. So it's still game for any reversal setups later on. But it's certainly interesting that this is probably like the third day that I'm seeing copper doing this. I think we may have some life back in copper. So usually September, October, and November are pretty decent for copper movements seasonally. Whereas July and August tend to be a bit meh. It's like whoever trades copper, they go away and have a nice summer vacation. But yeah, so that's one definite option. Now, what is happening with the value areas and all that jazz? Well, if we look at how far the price is located from the value, we are below it. So COMEX, let me find COMEX value because most of you will be referencing that. COMEX value low is sitting just sort of underneath 461. So 461. I use LME because I'm trading a little bit earlier. But once COMEX kicks in, you need to look at those values really. So 461. Change some colors. So what does that mean? How far are we from COMEX value? Let's move this into a solid state. I'm looking for the price. No. Here we go. Okay, price range. So if we stay in and around this area, how far is this percentage-wise? It's on the cusp of being within the 1% distance, which always means there's a high chance or higher chance of having the mean reversion back to value before it does anything. So obviously we need a confirmation for that, so you can either do the entry off of the liquidity grabs or stop run and reverse, and then wait for the initial balance to be extended to the opposite side in case that we're still in this area. So I'm not really that much in favor of breakouts from the initial balance because usually what tends to happen is that they break it, especially to the upside. Maybe if you're selling something, you can kind of go with the panic selling, and that most sort of sell-offs don't tend to have as many pullbacks. Not always, but just, you know, looking at it from a bird's eye view statistics. And yeah, so I wouldn't be in favor of long breakouts. So what I do with, in case that I didn't manage to get the stop run and reverse trade, I will then look to be patient for the initial balance to extend to the side that I want it to extend to, and then to almost kind of pull back, sometimes even 50% into initial balance before I will re-enter the trade. Unless we have like insane volatility, in which case, you know, poor choice of a trade location is usually rewarded by momentum, right? It seduces you thinking that you're very, very good. And then everything dries up and you're like, wow, this sucks. So it really forces you to be more aware of how you're entering and where. So keep that in mind. All right. Let's have a look at who's in chat. Yeah, obviously the risk disclosure. I always forget about the risk disclosure. Bruno posted that in the chat. So everything you hear here is for educational purposes and tradertainment. But, you know, if you have a plan, follow that plan and see how we are doing our analysis. All right. So who is in chat? We have Shay Hughes. We have Alex, Tatiana, we have Lenny, Gilbert, still by 36, Joe, and our Joe A. So yeah, good morning. Very good to see everyone. Yeah, so yeah, copper, very interesting. When it comes to options, we're actually sitting at the implied volatility low. I find that implied volatility tends to be very, very similar to my quantitative extremes. Sometimes they can be maybe different by about like 20 ticks or so, but generally it's a very, very similar measure, which I find very interesting since the way they derive the implied volatility is very different from what I do, but somehow we end up with similar numbers. I suppose we're all looking at price, right? So something's gotta line up. I find that when you've been watching the markets and trading the markets for a while, we all come to very similar conclusions. You know, I remember every time I talk to Coach Robert, he has a really different way of looking at things than I do. And apart from like maybe a couple of like maybe like 10 ticks difference, we're always looking at the same zones. And I'm like, how did you get that? It's like, oh yeah, you know, pivots and high low, and I'm like, interesting. So it never ceases to amaze me how that happens. So options, to the downside, we do have some weaker options on the way down, with 455 and 450 being any potential targets to the downside if this does turn into a single direction day. So that continuation pattern where we go below the ADR low and we ignore it, so we never reclaim it, and we almost use it on a back test as a bounce for a continued move. That is certainly another choice here. Single direction day. Single direction days are a little bit more common in copper than some of the other products. You won't see too many of them just going to the ADR high or low and they just keep going. That's like not an everyday thing. It's actually a very rare occasion. I would pitch it into sort of 8% of the tradable days for a lot of the products, with the equities to the upside having about 20% chance of having a zombie rally effectively. And we saw one in gold, but I'm not really sure. Like, I'm going to have a look, but I don't think that gold overshot ADR by that much yesterday, even though it looked like a big day, but I think it was fairly contained. Yeah, so just for the purpose of being more sort of efficient rather than me constantly drawing things for you, but let's go back just quickly. So if we go back to see where we are, here we go. There's Tuesday, Wednesday, and then we get to LME. And here is the expected average daily range, which was at 36.31. And then I actually had an average session range that was expected at 36.5. So if you look at just the LME values, we actually just hit that and reversed from it. So I find that interesting. But yeah, I would call this day, even though it was, you know, going up, up, and up, to me, this is a fairly standard thing. And then obviously we hit that. We had the electronic close, so day range fill. Again, very normal. Past VWAP, Asia opens up, and then we just carry on. A little bit of a wiggle. And then we just start going down, and now we've kind of hit the ADR low to the downside and reversed. Is there another update on the cards in gold? Potentially, because we have an ADR low bounce. So I would still like it to hunt that Asia low first. So I would like to see it 35.73. We do have 35.75 as a minor GEX level with like the highest concentration of open interest around there, and nothing else really. You know, all of the other prices are higher up. We do have some core resistance up at 3600, so right here, and it seems to be struggling around that. So maybe we could stay contained in a range between, let's say 3604 and 35.75. nice range. But yeah, I wouldn't want to be going too much in the middle of it unless I see something super obvious, because we're away from all the options levels and they tend to be revisited. So yeah. Drinky says, D, I'm an American up at 5 a.m. being a degenerate and going long until 23,550 for NQ. What are my chances? You know I'm not an NQ trader, dude. But 23,550, I mean, it's possible. That's a GEX1 level. If you can see the price picking up a little bit of speed above 23,500, which is a gamma wall, so anything can happen. Usually gamma walls tend to be at the very least sort of like traffic lights for the price. So there's nearly always some sort of a traffic jam around there before they decide if they're going to reject it or they're going to carry on. Now, nobody has a crystal ball, obviously. If we do get there, I'm just going to check what sort of gamma we are in, because I really don't check equities, because that's not my jam. I'm a commodities and energies trader. But we can have a look. We can have a look for the Nasdaq Alex over here. The Nasdaq Alex. Are we still in U contract? Because we should be rolling at some point. Okay, so we're in negative gamma, apparently. See, I don't know whether longs are still the good idea. Just looking at things here. Just looking at some data. Yeah, I don't know, man. Is it time for a bit of a pullback in equities? Because everything that I'm seeing is kind of pointing to some early trend change. Does it have a chance to reach 550? Yes. Is it going to be a little bit difficult with the gamma wall being at 500? Yes. Are we potentially in a bearish environment now? Potentially. Yes. Which means that any rally is going to be hedged by the market makers to the downside. And if we are truly in a negative gamma, then any level to the downside is going to be run over. Purely taking trend into context, because gamma doesn't give you direction, it just gives you behavior of the participants. Now, if we do manage to somehow get a catalyst that pushes us confidently above 500 in the Nasdaq, yes, 550 is possible, but in that case, so is 600, because in negative gamma, you would expect GEX1 to be an accelerator. And then, you know, you have a couple of traffic lights on the way to 700, but not really much in between. So yeah, but 500 is your line in the sand for your long. Just be careful, because there's some signs that we are actually changing the environment. Joe is also telling him, for what it's worth, 515 is the current backstop, as is 50% of the daily wick that a previous candle hit. When this happens, do not expect it to be broken subsequently. I mean, look, anything can happen, but statistics say that this is a dangerous area. And, yeah, it is the barrier. Same way that I'm seeing it, just using... And there you go again. So Joe and I use quite different ways of looking at the market, but, you know, I use options, I use profile, I use average ranges. He uses some concepts that are not too dissimilar from ICT, but we kind of go get to the same analysis, which is, always fascinating. It's like, however you look at the market, if you have some skill there, it's always a similar story, whoever you talk to. Drinky is asking, this is insanely helpful. I'm glad you think so. How do I know how to identify these traffic lights? So again, I have my own way of doing it by looking at mentor Q levels, looking at value areas from the previous day and quantitative extremes, and then connecting them to certain parts of the day when I expect certain events to happen because of the market mechanics that we have going on. We have the chase between the sessions, and in between those sessions, you have highs and lows that get established. They are points of interests for the market makers, and then whenever a market maker wants to hedge, they have these orientation points where they have to hedge, because that is where the open interest in the options market lies. If you want to know a little bit more about that, I did just do a YouTube video on the very basics of using options as your orientation. And, just have a look at that. If you connect to that, maybe you can go down the rabbit hole a bit more. But the way I use options, and yes, I know a lot about them, but for intraday trading specifically, I will be looking at things like not options trade. I do trade options, but we're not talking about that here. We're talking about trading prop, right? Prop accounts. And options levels are useful because they tell you how the market makers will behave at certain areas. And then you combine that to the sort of environment that we're in and overall context of, the trend and whatever else is going on. You can very clearly on most days figure out what they're trying to achieve. Because, I joke in the video that they're broadcasting their intentions every day, just going, we're over here, guys. And then you have sim traders who go, market makers hunted my stops. And in the meantime, there's like this whole data on the other side that's saying, yes, this is where we plan to hedge, guys. But nobody's looking at that because that's like, dark pools and like all these conspiracy theories about the big bad market makers. Drakey says, is it the video you put out 5 days ago? Yeah, on Friday. Yeah. It's the first video that I put out in, I don't know, months. I think I was still in my old house when I did the other one. Yeah. Tatiana is asking, could it be possible to do some kind of joint session with Coach Hoop and pit traders? Funny you say that, Tatiana, because me and Hoop are planning a session on the 13th of September, which should be a Saturday, I believe. Yeah. So there is one planned. I talk to Hoop nearly every day. Hoop and I are buddies, And, so we usually do at least one session together. Because it's very beneficial because he's more of a scalper and I'm more of I would classify myself more of an intraday swing catcher. Is that a thing? The intraday swing catcher. That should be my new handle. Like in the early days of TopstepTV, so I was here from like the second week, because obviously I know everyone since we've been with Topstep for so long, and Ho reached out and he said, we have this TopstepTV going, do you want to come and join us? And then we had these silly names for everybody, and Andre was Euro dollar trader, which is like the actual bonds. It's not the currency. Euro dollar trader and shop talker. So that should be me, like intraday swing catcher, Yeah. Puppet master and intraday swing catcher. My two titles. Yeah, fruit punch. I'm not really a trend trader. This is the thing, because I will do mean reversions. I will do continuations on a very rare occasion. So I'm not really, and then like if I had to classify anything, I would be a mean reversion trader. But I do tend to have this flexibility to just trade whatever the day gives me. Do I prefer mean reversions? Yes. Do you get them every day? No. So for me, I will adapt my strategies to the day type that we're experiencing. So on some days I will be a range trader if need be. On some days I'll be catching gap fills, and then on other days I will be doing continuations. So but if I had to, like I said, the intraday swing catcher, it's not trend. It's catching any sort of a bigger piece of the pie wherever you can get it. So that, to me, that's a different thing than a trend trader. A trend trader assumes that we're just going to have a trending day and then just snipes and holds it for like 4 hours, which I do sometimes if there's opportunities for that kind of a move. But the price has to be in some pretty obvious swing extremes on the daily chart and then rejecting them. Those are the instances, like for example, if I look at the copper is not a very good example of that. Neither is gold, because it's just going up and up to the moon. What could be a good example? Maybe, just thinking, maybe crude oil. Yeah, so crude oil. If you analyze crude oil on the daily chart, so where would I be looking for those single direction days? Well, not in the middle, I can tell you for sure. If we analyze the trend, it's a downtrend. There's no doubt about that. But if you then go further down the rabbit hole to look at your immediate highs and immediate lows, and then the corresponding supplies and demands, which is my very first point of analysis, you will see that the first point of gluing away from the low was actually the market shift that happened around 62.25 roughly. But where are we failing to go higher? Well, there is a mini range from 63 all the way up to 66. Why do I say mini range? Because it's closer, it's more localized, so it's not necessarily a daily low, because the daily low is much lower. But the immediate low for what we've had in and around this price action, what is that? Is actually 63, right? Sorry about that, by the way. I don't know what that was. So yeah, 60, whatever this is, 63. But if I look at the supply, like the swing extreme, here we go. The supply is now located around 64, 65, right? So where would I look for reversals and single direction days? I will be looking for them to touch 64, 65, then to maybe settle for a day or so, and then to reverse. So I would be looking for single direction days in around that area, in and around this area. Nothing in the middle. In the middle, it means that we are in danger of going either side. It's a coin flip. So therefore, you need to zoom into the day time frame. Look at your Asia high, Asia low. Look at your, is it a neutral day type? So yesterday was out, when I was on with Joe, we had a neutral day type on NQ, which meant that, longs immediately for the time of day that we were in was probably not quite right. But then towards the end of the day, that's when the day range fill happens, the short squeeze. That is the time of the day to fish for those full rotations to either side. But if we're in a weird time of day where there's not enough volume, it's a neutral day type, I'm not going to be looking for massive moves. I'm just going to be looking for snipes off of the session highs and session lows, whichever side comes first, or even second distribution curve. or zone, because it's a different way of using the distribution curves on a range day. So you have the absolute session highs and lows, but when they're not taken out, when there's no, what do the kids call it today, liquidity grab, we used to call it stop, run, and reverse, then you can also use the zone between sort of the first and second deviation band, using VWAP, so it's a volatility band from VWAP, not from a random moving average, which what Bollinger's bands do. So I will be using session VWAP, second standard deviation, so either the session high-low takeout or the band from the first and second standard deviation zone. And then seeing how the price action and order flow behaves in and around there. You can even find heat maps on Bookmap, and that kind of helps. Once you're in that zone, you can actually see where they're located exactly, whether it's above session high, whether it's contained into that zone. So it does provide you with a little bit more insight into what you should be looking at for those range trades. But yeah, time of day very important, volume important. I'm not a volume trader. I always say I don't use volume much. But then some people heard that and went, oh, she doesn't use volume. And I was like, I said I don't use volume much. I didn't say I don't use volume at all. The devil is in the detail. But that's just trolls for you. And then I had somebody who was like, oh yeah, and then she talks about responsive activity and blah. And I'm like, yeah, I talk about responsive activity being inside value, but also market making activities that when they hedge on range days at the attempt of exiting the value, and then they pull it back up. So then you look for GEX levels outside of the value that will stabilize the market, and assuming that we're in a positive gamma environment, you can see that they're stabilizers, right? So all of that kind of, to me, creates a picture of contextual and situational awareness. Now, if somebody has a problem with that, awesome. But that is just my way of trading after 18 years of doing this job and staring at the markets day in, day out. So if you find that too complex, okay, but someday you will understand. Like when you have kids that are like, well, when you grow up, it will all be clear. So that's what I have to say. Every time somebody says to me, yeah, but successful trading, like I had this one comment on my new video, successful trading is really not that complicated. And I was like, really? Because you're all successful traders in the comments then, are you? Because it's funny because statistics say that 90% of people lose money, but you look at the comment section of any YouTube trader, and you see like Warren Buffett after Warren Buffett. It's just absolutely amazing. So yeah, but hey, let's get back to trading. All right, so we say, Drinky says, do I have to have level 2 data in order to get this volume profile? So not for the I'm not sure actually, because I actually have level 2 everywhere, so I don't know. I don't think so. I think volume comes with it, regardless of the level 2 data is time and sales in the DOM. So I don't think so, but don't quote me on that, because again, I always have level 2 data and I have no idea what it looks like when you don't. So yeah, I don't know. Somebody else, if you don't have level 2 in the chat, do you actually have visible volume profile? Does that print for you? I mean, I think so, because I'm pretty sure I've seen some people using... Yeah, so Bruno says no need for level 2 for visible range volume profile. Yeah. CL is very weird. It's very hard to find a good entry. So here's the thing. I actually stopped trading CL last year, but I do trade its derivatives, RBOB and heating oil, which are more liquid, and you still have to analyze CL levels because that is your primary commodity that the other two are based on. Yesterday I talked a little bit about the crack spread, 0K spread. But it's legitimately, it is called the crack spread. So it's basically a very fine ratio between crude oil, RBOB, and heating oil. RBOB is gasoline futures. It's just its symbol. And what does it stand for? Reconstituted. I always mess this up. Reformulated blend stock of oxygenate blending. It's very, very catchy. That's what RBOB stands for. But we call it R. Roberts because that's what they used to call it. And then every time I say RBOB, because Coach Robert is Robert, right? So he always jumps. He's like, what, me? What, me? Am I supposed to be on? It's like, you're right. We're just talking about gasoline futures. It's all good. But yeah, so yeah, I use CL levels and analysis, and then I express my positions in either RBOB or heating oil. Heating oil is very, very thin. So if you, but it moves really well because it's so thin, right? This is an out of hours trade now, but it repopulates a little bit more. Now RBOB is a bit more, God, that looks terrible this time of day. So don't trade RBOB at this time of day or heating oil. Just wait until NYMEX. That is the time of day when typically everybody trades that. So yes. Trading nickels has an interesting comment here. I'm interested in level 2 data as much as the hundreds of hours I traded in places with fake level 2. Where is fake level 2? Like where was that? So I really want to know which places offer fake level. Is that the new thing that they're trying to do in is it Forex or somewhere? They have a new way of calling it, and it always escapes me. But there is somebody who asked me, was it the, let me see, new, what was it called? Because somebody asked me in chat, going, something like market, or like, I don't know, order. I can't remember what it is, but yeah. Oh, Coinbase. Well, that's not, yeah, Coinbase is not a centralized exchange. So you see, very different story here. And here is where trading futures is somewhat more straightforward than trading other things like Forex, crypto. So Coinbase is it's not a centralized anything, right? So it's a crypto exchange. So them claiming they have level 2 for anything, that would be a very weird statement for me, because that's like claiming that Forex has level 2 data. It doesn't. It's a decentralized exchange. Well, no exchange really, because Forex is traded in many places in the world. So you can't even collate that. Like, how are you going to do all of the transactions that are mainly done in like hotels, on cruise ships? That's all Forex transactions. That's all exchange of the contracts and money, right, and currencies. But it's not going to go into any particular exchange, because it's just people exchanging money and resorts and stuff. And anyone claiming to have level 2 data for Forex is ludicrous as well, unless they're actual Forex futures that are traded on the CME, right? So we have to connect these things in some sort of a logical way before we start to claim depth of market of any sort, really. And, you know, the reason why we have depth of market for futures is because everything has to go through the CME. And a lot of the crypto people who are obsessed with crypto, they're like, oh, I want everything to be decentralized. It's like, well, we have that. And frankly, it's not that great for trading, because you can't really track of anything. And I know that through blockchain you can track everything, but it's all anonymous. However, still, it's not the level 2 data all going through the same exchange, is it? So very, very different to me. Yeah, so trading nickels. Yeah, Forex volume, I'm going to put them in big quotation marks. Forex volume is really just a broker volume. So, whoever is trading at that broker, that's the volume that you're getting. And it's not totally useless, but it's certainly not coming from the central banks and the, big boys. So take it with a pinch of salt, always. And I never really, when I was a swing trader, I never used volume because I always find it complete nonsense. Like, it was almost always following whatever the candle was doing. So it's like, how is that useful? It's like big candle, big volume, small candle, small volume. And we know that's not always the case, right? So I just didn't use it for 6 years, until I really got into intraday trading futures. I didn't really think of volume much. Now, I still am not super obsessed with it, but for example, I do have setups. So let me explain this copper setup, for example, because it's a pretty decent range, as Muhammad would say. So let's go down to maybe a 5-minute chart. So I'm actually waiting for this setup when LME is when LME opens. So I'm gonna put just the range lines like this, just so we can have something to reference. So 3 options really. So 3 hypos. First, and the most important hypo would be that we go and retest this ADR low, which is now incidentally also becoming very quickly overnight low, because we're coming into, okay, it's still early, but let's say in about an hour and a half, LME starts trading. Now, everybody's not back for LME, so you're not going to see a typical increase in volume until probably next week. There's been a little bit of a kick up, so you do get some movement, but I found that we kind of stayed relatively range bound, and then did a false breakout only for COMEX Open, because LME is still they're still away on holidays and vacations and stuff, so keep that in mind. But basically 2 time frames, 2 windows. I have the first window from about 11:40 my time, so that's the LME Open, up to sort of let's say the first window would be 1 p.m. If I don't get that, I will then be looking for a similar, so if there's no entry there, then the time window shifts to 1:30 to 3 p.m. So it's like I work in these 90-minute chunks. But for this particular setup, depends on who has more volume and how things play out. It's either going to be basically, but usually it happens within 20 to 40 minutes of LME. But when I'm running those algos, I literally have them as a 90-minute time period, just in case. So that's one time window to look for stop run and reverse of the overnight low. Now, what do I want to see upon the breakout? So first and foremost, if we have some MAC volumes, and then you have one big spike, but the price doesn't quite, it just kind of spikes down and comes back into the range. To me, that would be more an exhaustion candle, and I actually have code that scans for that. And the second, which is a manual trader thing, you effectively need to have the price pulling back into the range. So if it breaks by too much, You still need to see whether they're going to pull back into the old range, and that becomes the non-aggressive entry to scan for stop, run, and reverse entries. So you can do that by bookmap as well, but have a look at what we have as a behavior at the range extremes. Okay, so let's move this along and analyze. And for this purpose, I might actually remove my face just so you can see exactly, so that I'm not blocking anything. Okay, so first time that we establish a range, what happens? We have the volume that is really massive compared to the previous candles. Yeah, so it's like nothing, 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 nothing. We're going down, but then we reverse. That's a range low established. You don't see that at the proper breakouts. Usually the proper breakouts are much more controlled, and then the volume builds and builds and builds. And there's none of this like shakeout of you know, volumes that are much, much bigger. Like this is such a big spike. So I call those exhaustion volumes. And then we get, you know, we try to go higher. And again, we have huge lot of volume. But look at the size of this candle. It's tiny. Absolutely tiny. Now, back in the days in Forex, that would also be low volume because obviously it would be broker dependent. But here, it tells you that we had a ton of volume churn, but the price did not do anything. It just stayed contained. So that to me is a divergence between the size of the candle and the volume. What happens? We reverse. Then now we have this range established. So now we have a price action reference, which we didn't have before. And then you see the same thing. Even though now it's getting a little bit more difficult to figure out what's happening because the volumes are more even. But the same pattern happens, right? We have the big volume, but the candle is not really doing much. So small candle body size, but a lot of volume equals volume churn, and then we reverse. And so on and so forth. So hopefully that will help a little bit with like range establishing. But when you have a true break, you don't really have these volume spikes that are just like whoosh, and then nothing, whoosh, like you don't have those. So those are exhaustion volume spikes. If we look at how the true breakouts happen, you will notice, let's see, this is overnight. I don't want overnight. So here is the nice trend reversal, right? So you still have that shakeout candle, which is not nearly as obvious here. It's the end of the day, but the same thing applies. So this one has a little bit more volume, and then this is my end of day fade. Also, I like doing these. Sort of last half hour of trading, you typically have these reversals in copper, and even though it's slow, it's very smooth. So I like to just stay in on those. Sometimes when I'm able to trade past the Topstep 10:09 time, I will stay on them until the very end of the day. And they're beautiful trades, but very slow, like very slow. Don't expect the end of the day to do anything fast, especially not in copper. Yeah, but let's have a look at the proper breakout. Here we go. Okay. Here is, yeah, let's have a look at this one. So we reverse, you know, we establish sell kind of a high, then it's done. This is more of a reversion trade, but look at the volume. So reversion trade. Very smooth. So there's none of that, you know, one big candle, then nothing. And then one big candle. No, it's like building momentum from the opposite side to just kind of keep going. So it builds momentum, builds momentum, and then usually, again, the exhaustion candles, the volume exhaustion candles, they always happen when either a traffic jam is about to happen or you have some sort of a shakeout. Like, they're just not, people go, oh, yeah, a lot of volume happened, it's a true breakout. And I'm like, what are you looking at? Because in my experience of staring at this stuff since I've been a prop trader for 12 years, 13 years, the exhaustion volume candles with high volume churn but no follow through price action is always a fake out. Like, it's always a fake out wherever you look. Now, if we look at the single direction day, which we did have the other week, what was this? I'm just trying to find one. It was last week for sure. And they kept going down. So let's see. Okay, I think it was this one. We may have changed contract since, but yeah, let's have a look. Yeah, so again, anytime there's a traffic jam, shake out, and then consolidation. But when they start to continue the story, they start to build volume. Look at how smooth. It looks like a staircase, doesn't it? Step 1, 2, 3, 4, 5, 6, and we're up. We're down. But yeah, steady increase in volume. That's a proper breakout, right? Now, hindsight, this is very difficult to figure out in real time because you have only like these two candles. It's like, is this building momentum? But as long as you did, like, if you have a directional idea, and as long as you don't have those like shakeout candles that are just super massive compared to whatever you have around it, that you can see in real time, right? So whatever happens, like for example, if now, this is why I have this moving average for the volume also on my chart. So right now, I would deem this candle to be a little bit big for any, obviously still creating, but yeah, I would say this is still all just range trading. This is too big of an increase to be like a steady momentum build for the subsequent reversal. It's still just like shakeout, traffic jam, consolidation, range. So that's how I look at it. And I have code that scans for these sorts of shakeouts above a certain amount of volume and then looks for a false breakout to occur in the next instance. Not sure how different cumulative volume delta is. A friend was posting charts of it, not volume delta. Yeah, CVD is literally just the aggregate of short-term net buyers versus sellers. That's all it is. And then if there's more of them, more of them on the buy side, delta will be positive. If there's more of them on the negative side, delta will be negative, and we can get divergences because people will keep trying to go long in an unwinding day, B-shaped day that we just kind of carry on and on and on. And then what is your for your buy order, what is your sell order? What is your stop loss order? It's a sell. So you fuel the negative cumulative delta. Sorry, it's a buy. So if you're, I'm confused now. Haven't slept, 4 hours of sleep. Okay, let me see that. So when you're trying to buy in a trending down market, you will be fueling so you will be fueling the market to the downside because of your stop losses that are fueling the negative delta to the downside. So that is actually a good thing, but those days also bring the short squeeze towards the end of the day on a lot of the days in equities. So you have negative delta, negative delta, negative delta, vastly negative delta. Now we're going in the hole. What is going on? And then we get to like the last 30 minutes and they reverse it. We saw that on equities yesterday. But it doesn't happen until that like very last moment. So here it is. So was it? No, that's not it. Hold on, it's a 5-minute chart. I'm used to staring at the 30-minute chart. So let me orient myself first. Yeah, I definitely shouldn't trade today. My brain is working at like half capacity. Here we go. Okay, there we are. So day range fill. This is my play. I'm gonna put a vertical line and demarcate that. Where are we? Where are we? There it is. Okay. So yeah, this is what was the case with equities yesterday. Just yesterday. So when this was happening, I did see that there was quite a bit of negative delta going on at the time. And they just got too negative. They got too negative. And then the guys that were short, and girls that were short earlier, towards the end of the day. So there's twofold thing that happens. At the end of the day, so imagine you're this poor dude who on an unwinding day keeps buying and keeps getting stopped out and keeps buying and keeps getting stopped out, keeps buying, keeps getting stopped out. And he's like about to tear his hair out. It's like, I don't understand. Oh my God. And then we get to the end of the day and all of the people who were short now start taking profits. So they were short. So suddenly you have a bunch of buy orders that are flooding the market. And the poor dude who was looking for this event got absolutely cut up chasing longs down here. And yet, towards the end of the day, we finally get to those last 90 minutes when the market settles. You can even use Wyckoff strategy, Wyckoff ideas for this. You have an accumulation, so it settles, so traffic jam, right? And then you have this enormous run into the end of the market, end of the electronic trading. Okay? So that is a short squeeze that I love doing. This is why I say I don't really trade equities. If I am, last sort of 90 minutes of electronic trading is when I will be trading equities. So, but yeah. Many ways to take advantage of all of this information. But yeah, you just need to know a few of the conditions that you want to see when you are actually getting involved, and then let the price action do the rest, right? The problem is I think we connect too much of our self-worth, expectations, pretending we're psychic, all of that, because we're not necessarily predicting the market. We might be using predictive models, but you're not trying to predict the market. You're just trying to have an idea, have an assumption of what should happen at a particular time of day, and then see whether the market participants are doing the same. So if I have an idea of going long at the end of the day, and I know that we are, for example, in a negative gamma environment, and I know that we're also arriving in some sort of a, let's say, put support area, and I know that I have space to, GEX levels that might be back up somewhere. So all I need to do is to look for the entry and then leave it alone. But the time of day is absolutely paramount in intraday. I know some people don't subscribe to the time of day, but that's because they're in the market for like 3.5 seconds. For me, because I want to stay in for 30 minutes, 2 hours, however long the trade setup is presenting to me. I need to have the time of day absolutely spot on for that to happen. If I don't, then we're in the situation where you're going to get stopped out once, and then you see your trade actually develop at the proper time of day, and you're like, yeah, why did I trade? So try not to do that. Maybe go back in your history and see, one of the metrics that I find the most useful is the hour by day. So if you look at your P&L aggregated for enough sample data, and it pains me we don't have that in Topstep yet, because I think that's a very, very useful measure. Because I would like to see somewhere here, instead of, or in addition to, maybe have like a sub area to also have like a net daily P&L, and then maybe if you can fall down by like hour of day. That is so useful, because it breaks down the day when you suck and when your setups are actually working, and it aggregates them into everything. So you can actually have a look. And this is the win rate analysis of how that's a different measure. So that's not the same thing. You want time of day, and then looking at the actual times of day when you're doing better, right? And then usually when I'm doing this for other people, it's more than obvious the times of day when they shouldn't be trading. It's like this big red P&L that accounts for most of their losses, and then some of the other P&L that is like, ebbs. But yeah, Tatiana says, that was me yesterday, taking stop loss the whole session, hitting my personal DLL of minus 500, then looking at that long shooting up without me. Yeah, so just take the the advice about times of day. So there are different market mechanics at work, and day range fill for the final. It's not going to happen every day on the short squeeze thing in equities. It's not an everyday thing. But if you have quite an obvious sort of B-shaped down day, or a day where it was just clearly unwinding day, look at the cumulative volume delta. It needs to be heavily negative at that point. If it's just like normal, it means that it's maybe not that big of a day, even though it went down. But maybe it's just like, it's just NQ doing NQ thingies, right? Fruit Punch says, what I learned from a large volume spike on the last candle, it happens a lot near support and resistance. Yeah, absolutely right. Signs of a reversal that other parties are stepping in. But usually they like to go in intraday trading, because the amount of trading information that we have even for something like a 30-minute time frame, it is not, it's not enough to stop those liquidity grabs. But if you're looking at support and resistance on the daily chart, you would actually expect more that the entire demand or supply area to work out better. But intraday, expect them to be run through as like a high probability setup before anything. So high spike takes out the previous low that was created on lower volume, and then returns into the range. And if you have a level there, all the best, all the best, all the better. Oh my God, my brain is just so not working today. I may have to have a cheeky slurp of nicotine, but I'm not going to do that on camera. Sorry about that. Bit of a new topic to wake me up, because struggling to put my words together today, to be honest. But yeah, so signs of a reversal that other parties are stepping in, yes. But to me, that needs to be a twofold thing. So you can have the shakeout, so the liquidity sweep, as the ICT traders like to call it. We used to just call it stop, run, and reverse. Call it whatever you wish. I'm a bit old school. And then you want to see it return to the range. So you can do the aggressive entry after the big volume spike, absolutely. But then you really need to see the follow through of that reversal. And the very first contextual thing that you have to look for is that the price actually meanders back into that range or spikes back into the range. If it comes out again, you are then in danger of a true breakout and a continuation. So two conditions, right? You have the volume spike and you have return to range. But ideally, you want to be in before the return to range to get a better entry. I use Bookmap for that purpose. So you would see a huge spike through it, and then you see, usually there's a heat map as well, so you can see which area they're targeting, and typically it will be, actually copper does that quite a bit, so yeah, maybe even platinum. I'm just trying to see whether I have an example on the dome that I can show you. Does not look it. Somebody was gold futures earlier. Be careful, there's a core resistance at 3600. And we're in the weird time of the day before LME opens where it doesn't really trend. It like either accumulates or distributes. So yeah. I don't have a good example here to show you, but actually, yes. Here's the thing. Don't know how much stock I should put into this today because the time of day is wrong. We're not in the active trading hours. So this analysis of heat map on Bookmap effectively is what we're looking at here. It's the same information. So you will see a ton of contracts on like one level. Now, the price typically goes to hunt them, but it's not a hunt. It's just a market maker activity to basically push the price up to a certain level where they can pick up orders that have deeper liquidity pools. Does that make sense? So, you see all of these levels, 1324, 1324. That's not enough liquidity. If you're wanting to fill, let's put ourselves in shoes of somebody who trades with size. Let's say you have an investor and he said, I want you to fill 1,000 ES contracts. I'm a multimillionaire, got a portfolio, and I want to put some in the stock index. So yeah, fill it. And then as somebody who's filling these orders, you're like, okay, so I can either do this through like multiple executions, and the more executions you do, effectively more round turns you're gonna suffer, right? So it gets more expensive. So they're looking for areas where they can fill the orders for the least amount of execution attempts for the most contracts. And that ain't gonna happen if you got 1,000 lot to fill. It's not gonna happen at these levels. But it might happen that you get maybe about 200 or 300 at the level where 740 of them are sitting. So this is why you see prices hunting levels and hunting liquidity, because they need it. They need the liquidity pools. And every time let's say that I'm short, yes, I'm not, by the way, but let's say that I am short. I don't like seeing this because I know that a better entry would actually be at least at or through the 64.71. So I might look for another level, like in this case we have the high of day right here. So you know that they're at least going to hunt 71. But really, I would be looking to snipe that after the shakeout, after the thing, somewhere when it breaks the high of day. So level, heat map, volume spike, return into range. That's the sequence of events that you need to have for the stop, run, and reverse, if you're looking for it. But having so many contracts there, it's not good for your position, for your short position. It's better that you let them do whatever they want to do and then grab it post them grabbing their slice of the pie, and then you strike. To me, that's a much better way to fish for things. And you have an actual heat map and prices to fall back on. You're not just guessing. You're actually seeing where the depth of market is actually located, where the liquidity pool lies. So you're not just going, well, it's higher day. Well, no, actually they are aiming for 71. Do we have higher day there? Yeah. Is that a better entry? Yeah. Can you even front run a scalp through this? Yes. So that would be, if you want to do those kind of trades, all you will be doing is looking for imbalances of this sort, going against them. So in this case, it would be a long until they're broken, and then you take your profits. That's all the people used to do. Like, I know people who that was all they did all of their life. Hunting liquidity. It's like you get ahead of them, they run through it, they take profits. There's no charts for that. You don't need charts for that kind of a scalping strategy. Like, why would you use a chart? Like, what use is it to you to know that that's the Asia high and the Asia low and that is the day's high? Like, you see everything you need to see just by having this information. So to me, it's very funny to hear retail traders going, hunting my stops. Like, what do you think? That market makers are some, like, dudes who are coming to work and going, today I'm going to hunt the sim stops of all retail traders, and that would be my main goal in life. It doesn't make sense. It does not make sense. But when you look at it from the point of view that whoever has a lot of size to fill, they need to find ways to fill them for its least amount of pain. And they will be liquidity, but they will also be looking for other players to fill their orders. If you want to go, long, well, you might want to go looking for longs lower down, right? And to see where it's like supply and demand, right? So you could say that the demand is, well, this is not the biggest, but let's say the demand is 64.46, and then the biggest supply here, 64.40. But it is liquidity, so we expect them to be taken because those orders will be filled, hopefully. We don't know whether they'll be filled, obviously, because they can spoof them. They can be, there, and then they can pull them, and then technically that's illegal, but it's very difficult to prove, right? If somebody was there with like 500 contracts and they account for the majority of that, and then they change their mind because something changed, how do you prove that that was a spoof and not a genuine order pull because they decided that things have changed? It's fascinating. It's fascinating. Yeah, exactly. Fruit Punch says, I don't believe in hunting because there's such thing as they. Yeah, who are they? The wizards. The wizards. There's no specific participants. Yes, we're all the participants in the same market, especially in the futures. It's just size is the difference. There is definitely market-making hedging that has a lot of effect on today's price, especially because of the 0DT options rise. So now you have the retail that is equal or over the amount of the institutional options flows, which is very worrying, but that's a story for another time. Drinky says, I like to think of price as an insatiable Chinese dragon hunting up and down outside of the highs and lows liquidity to eat. Why does it have to be a dragon? Can't it be like, a rabbit? Why does it have to be a dragon? Like, it's always these like fierce animals that are like hunting things. And yet the most successful predators are actually ambush predators. Now, that I have this guy behind me, my chameleon. His name is Bob, by the way. The reason why I chose chameleon to like represent my sort of trading methodology in general is because chameleons have like something like 70% success hunting rate, and yet they don't chase. They just sit on the branch and they wait for the fly to come to them, or any insect and stuff, and then they just go beep, and that's them done, right? Job done. Whereas a lot of traders have this idea of lions and tigers, but lions actually only have 30% success rate. So they're not, the chasing animals are effectively the chasing animals are not very good with their hit rate, if we're going to put it in that regard. Anybody who sits and waits always has a better chance of getting what they want, right? So think about that. Drinky says, do you think Bookmap is the best platform to see this? I don't know about best. So that will be very specific to the trader. I have some traders who do use level 2, but they find Bookmap very cancerous. I have others that absolutely adore Bookmap. So each to their own, right? I don't know. Try it and see. It's not cheap though. So I think it's about for Global Plus, I think it's about $89 or something. I don't know. I don't really look at prices all that much. But yeah, it's not cheap. It's gonna set you back by at least $80 a month. Trading Nickel says, so lions have a higher risk reward. Yeah, quite possibly, because they stay alive. But to me, less work is what it's all about, rather than all that cardio, right? Less cardio, more sitting down, more waiting. And by the way, this comes from a former gym rat. But yeah, I can't do that since I got sick. But yeah, chameleons just sit on a branch, do F all, and they still eat. But you're absolutely right. Trading nickels, yeah. Lions could have a higher RR. Because maybe they have, meat to last them for maybe a couple of days. Whereas the chameleons don't really stash things, do they? They just eat it, and that's it. But yeah, I still prefer the ambush predator to the chase, and scalp her and looking for like it's definitely a personality choice. For me, less trades with higher risk reward is where I'm at. If we have that sort of situation, because I don't force it. I'm not going to be looking for 3 Rs when the entire initial balance is like 50 ticks and we are in a neutral day. Like, yeah, of course you're going to have to flip back to actually trading with like 20-30 ticks profit. So yeah. Drinky says, I am also adverse to cardio. I never used to be. I used to do 2.5 hours of exercise 6 days a week. So I used to do typically about 45 minutes to 60 minutes of cardio at the end of the session. But I would do at the very least 90 minutes of weightlifting before then. Some days I would just do weights. Did I like cardio? No. But I wanted to keep my cardiovascular system working correctly. Now I can't exercise at all. So whatever I did, I did. Maybe I'll someday, but at the moment, that is not an option. Yeah, no, Drinky, I get the whole dragon serpent analogy. I was just joking, it's like, why does it always have to be a dragon or a lion or, some sort of a fierce creature? Why can't it be like a cutie? A hamster. This is a hamster. Like, that would be funny. It's like drawing hamsters. I'm terrible at drawing. One of the reasons why I never draw my charts is because I can do lines and stuff, but you ask me to actually draw something. First of all, I'm using the mouse it's a weird one. So computer mouse, somehow I learned to use it with my right hand, but I'm left-handed. So I can do, and yet I put the mouse in my left hand, it's like I am holding a brick. Even though I write with my left, I brush teeth, like everything that matters, I cut, vegetables and stuff all with my left hand. And yet, ball, so plain ball and computer mouse, right hand. I don't know why. Maybe it's because back in the day when I was a kid, the first PC that we had when I was 12, that was 1992, I only had you couldn't flip the mouse, so maybe I just had to develop it out of a necessity. Only later Windows, they came with the option to flip it, so yeah. Bruno says, mosquitoes, they keep trying until they succeed or die. I think that's a bit of an extremist lifestyle, and I don't think extremes of that sort are good for traders, even though many of you aim for that. It's like, I will get rich or I will die, I will be very poor. And it's like, there is a golden middle, where you can make like 5-10K a month and be very happy. But people are like, I will fall port until I'm 100 million worth or nothing. Or nothing. Blow up an account. But yeah, if you okay, here's the brush. So yeah, I don't know how to draw anything. So my style of drawing. One time I tried to draw like a dog, and it came out like some sort of a weird creature. Weird creature with like weird boobs that was supposed to be paws. Like, yeah. Drawing is not for me. So yeah, my sister is very good at drawing. She's amazing. Like, I'm good at music. I'm good at sports, or used to be good at sports. But yeah, just don't ask me to draw anything that looks like something that resembles. Maybe I can draw a tree. I think a tree is just about right. So let's try that. So a tree with like branches. So I'm okay with drawing trees, I think. Not bad, right? But anything more complex, maybe I can draw glass. How do you, okay. I can maybe draw glass. Can I draw glass? A tall glass half full sort of thing. No, that needs to be round. But yeah, one of the reasons why I think I'm not that great is because on the chart I'm using my right hand for the mouse, and I don't have, I have control, but I don't have as fine a control as my left hand. So yeah, and people are like, why don't you draw on your charts, Dee? And I was like, I'll put lines down. That's as much as I can confidently achieve here. All right, natural gas is starting to wake up. Wakey, wakey. What is crude oil doing? Nothing. So it's got a natural gas specific, it seems. Oh, bit of spike here in crude oil. But no spike here, so interesting. Yeah, I'm going to be watching natural gas, but I'm going to be doing more coding because I can't trade on 4 hours sleep. I don't even think I had 4 hours. I think it was more like 3.5. So yeah, trading when you're exceptionally tired is not a good thing. I'm probably going to lock out my live account for the day, and then we're going to wait for NFP to happen tomorrow. I think it's tomorrow. Didn't I look at the calendar already? But I forgot. yeah, so it is tomorrow. So we're going to have a look at that. And once NFP is out of the way, we should start seeing some more volume and liquidity and committed movement coming back into my commodities, markets, and metals. Obviously, gold has been on a run like crazy, but copper has been very quiet for the last sort of 5 weeks or so, 6 weeks. So looking forward to getting my copper back in the game. And in the meantime, it is what it is. All right, so let's just check chat before we sign off. Yeah, Tatiana, my sister does crocheting and she makes crazy little animals from it. And then one time I said to her, because I'm obsessed with Mandalorian and Grogu, you can see it like on my window as well. I have the official doll. But then I was visiting my mom and obviously my sister as well. So we were sitting down and I said, you know, I'm going back tomorrow, going back to London. And she said, well, I created the Grogu for my husband because he's also into Mandalorian. Do you want one? And she showed it to me and I was like, but I'm going tomorrow. And she's like, yeah, don't worry about it. I'll do it. So she comes up with this thing. Not only one. So let's see if I can zoom in. There it is. So not only one, but she gave it to me in the second color as well. Now, one of the dogs got a hold of this little guy, so the ear is a bit chewed up. But, yeah. So, 2 Grogus. So, she even does, like, bigger animals and stuff. So she's really good. Like, it's amazing. She did this in, like, how long did it take you, Sally? It was like a morning? Like, literally like an hour and a half, 3 hours, something like that. So I'm like, you're crazy. I could never do that. So yeah, I leave the arts and crafts and painting to my sister. Yeah, go on, Sandy. Tell them how long did it take you to create these two? Because it was in the morning. I was there in the afternoon having coffee, and then I told you I'm leaving the next day, and you were like, I'll have it done for you. And then in the morning, you're like, when are you going? And I'm like, why? She's like, because I have the Grogus for you. I'm like, what? A day. There you go. A day. But it was less than a day. It was less than a day, Sandy, because I was there in the afternoon. And then I picked them up at 10 a.m. in the morning the next day. So you had to have slept at some point. Yeah. Get your sister in the frame. A little bit difficult since we don't live in the same countries, mate. A little bit difficult. Yeah. So unless they come up with like a molecular transport of some sort, very, very tough. I live in England. Sandy lives in Belgrade, where we're from. All right. That's it for me today. So I said I wasn't going to trade, and I don't see anything yet, even on a combine. So I'm going to go and do some coding. I don't think that I'm on the main broadcast until next week. Yeah, I think I'm on Monday. But until then, let's see what NFP brings, and let's look at being a little bit more controlled while the equities are still in this like weirdness, because I know a lot of you are equities obsessed. There are opportunities, but there's still a lot of overlapping candles, and that's partly because everybody's waiting for NFP release. It is a very important release, so just make sure you don't go overboard. Don't do 100 trades a day and then find yourself blowing up combines left, right, and center. But if you do, I'm just going to remind you that Back to Funded is now in force. It is live. It is now an option. I can answer more questions about it at some other point, but it's basically our version of straight to funded, right? So if you mess up an XFA in the first week and you've not taken a payout yet, you can actually put up some cash and get the reset for the XFA. Effectively, that's what it is. It's not cheap, but if you value your time over, getting a cheap combine, that's something to consider. Because to me, time is the most precious commodity, and you don't get that back. So if you messed up and you know where you messed up, back to funded is now an opportunity to shell out a little bit more cash in return to not having to grind it all out through the combines and through the churn and burn cycle again, and get back to the funded level. So it's a very, very good move from Topstep. That's it for me. This was the Euro trade. I'm Marcus D. Thank you so much for hanging with me. Hit the like button on the way out, and if you're not subscribed, please subscribe. Also check out my channel below, and I will see you again for the Monday Euro trade, which is still in the same time slot. Again, thank you for being here. Take care.